I'm going to show you guys my full trading model today. So starting off with the high time frame buys, that's my step one. I want to see where price is going. So on NQ, market has been making all-time highs at the moment. On the 4-hour chart, you can see pretty bullish. You can see a couple of bullish fair value gaps being respected. There's one here. Price eventually, came down and respected this, pushing price upwards even more. And we have another one here. And there were many 4-hour fair value gaps that got respected, especially here as well. So there's a few on the 8th of May, created one, dipped down, respected it on the 12th of May. There was another one created on the 12th of May, and on the 13th of May, price respected it. And another one created on the 13th of May, and on the 14th of May, price respected it. So now we can conclude that high time frame is buyers. I'm going to be looking for long entries only in my lower time frame. So scaling down to the 1 hour as well. And if I was to chuck on my indicator, you can see as well, I did a trade yesterday. That's why I wanted to share with you guys my trading model as well. You can see my previous videos as well. I've been revealing everything that how I trade. So I normally trade from 9:30 to 11 EST. We can see yesterday, if I was to show you let me just take away all the fair value gaps. We can see during Asia session yesterday, price actually was consolidating. Not much happening during the Asia session and the European session as well. Not much happening, but price has been slowly crawling towards the downside, creating a lot of low resistance liquidity run right here, in expectation of price to just run up. So if we go down to the 15-minute time frame, you guys probably can see the New York session that I trade from 9:30 to 11. This is just my preferred session. Obviously, you guys can trade, Asia, London, depending on where you live, and even New York PM as well. But I trade New York AM, which is 9:30 to 11. I don't trade 8:30 as well. 8:30 is when news events come out. So I will normally use that to frame my trade. So we can see here, like I said, Asia session, not much happening, accumulation. London session, accumulation as well, creating all that low resistance liquidity. And when 9:30 came out, price actually took it out. Price actually took out the sell side liquidity here at 29,405 at about 9 o'clock. At 9:30, it just ran through. Before that, there was also a buy side liquidity that was put in at 29,616. Right, so let me just take this line away so it's clearer. So if I chuck on my execution marks, you guys will be able to see when I took my trade. So let's go down to the 5-minute time frame. I was actually monitoring this on a 5-minute as well. We can see that when price swept this sell side liquidity here, price just ran up all the way. And we can see price eventually targeted this buy side liquidity here, right, 29,616. But sometimes it's best to wait for a clearer market structure. Like for me, I did not just open up a trade here because there was no confirmation on my lower time frame model. Like I said, my lower time frame model, entry model, I need 4 criteria. The first one is TS. The second one is lower time frame IFVG. The third one is a risk to reward of 1 to 1, and we need to have some sort of opposing liquidity that we can target. Right? Oops. So we have, I'll look for this for when I look for my trades. So we can see here we have opposing liquidity 29,616, and price initially on the 5-minute retraced, disrespected this bullish. That's fine. The bullish 5-minute fair value gap. Let me just hide my indicator so you guys can see. I'll put the 9:30 here so it's clear for you guys. And it also sort of disrespected this 5-minute fair value gap. But when it came down to the last one, the one in orange here, price actually respected it pretty strong, right? And also, you can see there's a sweep here. So let's go down to the 1 minute and have a look. So on the 1 minute time frame, Now let's stick with these ones because these ones were not in use anymore. Those are irrelevant. So we can see here, this is a 5-minute bullish fair value gap that was respected. We can see here on the 1-minute time frame, I actually took my trade here. Why? Because it respected it, it displaced towards the upside. It also created a 1-minute inverse fair value gap, right? So I took this trade with a how about, what do you call that? I only normally trade 1-to-1, but I got stopped out here because price retraced heavily here, and that's just part of trading, right? It's just part of trading. You can't really control what's going to happen to price, but as long as your model or your entry criteria exist, you can take the trade. So we can see there's turtle soup here, right? This line here, turtle soup. If you want, I can make it clearer for you guys as well. There's turtle soup into the 5-minute bullish fair value gap. So there's one. We have a lower time frame inverse fair value gap, which is here. This 1-minute inverse fair value gap. I'll make it purple. We have an RR of 1-to-1, and we got opposing liquidity. Opposing liquidity is actually here, like I said, buy side liquidity of 29,616. I can chuck on annotation here, buy side liquidity, so it's clearer. So I got stopped out, and I just waited again. My second entry though was really good. So my second entry, I just waited and waited and waited again. We could see that price eventually came down, right? And actually still respected the 5-minute bullish fair value gap. But here the TS was a little bit more clear. So we can see there's a lower time frame TS again. I gave you my second setup. And what do we have here? We have another 1-minute inverse fair value gap that was created. This one I'll make it blue, so it's maybe green, so it's easier to follow. So green, and we got huge displacement. So TS, displacement, RR, 1-to-1. Initially I was just aiming for these buy side here, but we can, if we go down to the bigger time frame, like the 5 or 15 minute, you can tell price is eventually looking to target this zone is magnetized. Price will magnetize this target of 29,616 because that's the eventual target of where the liquidity is sitting. Stop orders, pending orders, stop losses. So I actually took my trade here. So around here, I put my stop loss underneath. This time I'm underneath that pin bar. No, sorry, that wick. And I was aiming for about 1-to-1, which is around here. Yeah. I'll just make it more accurate, 1-to-1. Yeah. So we can see here, took the trade. I actually, when the price hit this level here at 29,540, I just moved my stop to break even, right? And as soon as it hit 29,580, I pushed my take profit all the way up to 1-to-1. So if the price was to come back, my 1-to-1 risk reward was already secured. So you can see here, price trailed all the way up here, but until 29,588. Price retrace, stopped me out here at 29,554, and it actually reached the eventual target of 29,616 at about 10:45. Right. So recap. High time frame bias. Right. High time frame bias. We have to know whether it's bullish or bearish, and we know that by price respecting bullish or bearish fair value gaps. So just things like that. So once you frame a high time frame bias, you know what you want to do with your lower time frame entry. And like I said before, this strategy is not 100%, but it gives me a win rate of over 70%, right? And see, my first trade obviously was valid. My model presented itself, but I got stopped out. What can I do? So I waited for another entry, and it gave me what I needed. So overall, it was a really good day, and this is just my trading model that I use every day. So I hope you guys found this video helpful. Drop a question in the comments below if you guys have any questions at all. Also, I've got my free trading checklist that you guys can check out, link in the description. And yeah, thanks for watching. I'll catch you guys in the next one.